Good morning, this is Jason Sen from DayTradeIdeas.com for ntmarkets.com. Going to have a look this week, starting with the dollar yen. We have been following this fairly closely of late. This is the weekly chart. Doesn't actually show an awful lot other than a huge run up, of course, over the last 6 months or so. We are, of course, very overbought on the weekly chart, daily chart and everything else, but we have been for a while, so that in itself doesn't really mean anything. But we are hitting quite an important resistance level, or we've hit it already. 102.97 area is a big Fibonacci level going all the way back 13 years or more, actually 15 years. So this big 15-year Fibonacci level around the 103.00 area is important. We haven't managed to break it. Last week we had a go. We got as far as 103.31, but and we actually closed the week around the 103.20 area, but we haven't managed to hold that this week. We've dipped back, so we've really now got to see the 103.00, 103.30 area is quite tough resistance for this week. If we test it again, it might be a selling opportunity, and we can keep nice tight stops, above there. So possibly worth a try on that one, but only really a close now above 103.30 is going to open the door for further gains on that one. Next chart is the daily chart for NYMEX WTI Crude oil. We've had, well, it's been very volatile lately, but recently we recovered and we've been in fairly steady uptrend now for about a month. But we've double topped, as you can see. 97.17 was the high, beginning of May. We tried that again this week, got as far as 97.11. So it's a bit of a double top pattern really, right at this upper trend line, which is a thick red trend line that you can see there, which again we haven't managed to close above on a daily basis. So I think the risk now is being massively overbought on the daily chart, that we perhaps head lower. I mean, you can see we've been stuck in this range, which goes back 6 months or so, top of the range. It's tricky resistance. We've started to drift lower already. Wouldn't be surprised to see it back around the 94.5 area. We've then got the 100-day moving average around the 93.95. Below there, we've got some fib support 92.75, which ties in fairly closely to the 200-day moving average at 92.31. So those are the sort of levels to keep an eye on the downside. I think it was last week's low that we got down to 92.13. So a break below there would then keep us weak, and the next fib support would be 91.39. So some levels to watch on the downside there. Obviously, really only a close above the 97.20 area would negate the idea that we're going lower and would then allow us to push higher. The target above there would then be 97.80, which is that high that you see for April. So that's one to keep an eye on. Staying on the energy theme, this is the weekly chart of natural gas. It's been in a lovely uptrend. We've been following this one quite closely. That's a year long chart, if you like, from last May, April, May. Weekly chart, as I say, we came back. We found a really nice support level here, which was a fairly obvious one, really. The high in November, 39.33, big support, fib support, 38.44. So we found a support around that area, bottoming in fact at 38.86, which was all fairly textbook technical analysis stuff. We're rallying back up now. We are a bit overbought, but having said that, we could stretch as high as a retest of this 44 area, which was the previous high, but being so overbought, there is a big risk of a double top there and maybe something more significant to the downside to follow as we head into the summer, but we'll just have to watch that one. Okay, thanks very much. I'm Jason Sen for ntmarkets.com.